Hey, this is Matt from InvestiQuant. Today is Thursday, September 24th, 2020, and today is the day of our webinar. So I want to invite everyone who is watching this to join us for a webinar today after the close at 4:30 p.m. Eastern Time. We'll be looking at this platform, showing you how you can use it. We'll also be showing you some results based upon trading strategies that were built using Discover that I think you'll find exciting. So I'd love if you guys could join us today after the close, 4:30 p.m. Eastern Time, and there is a link to sign up below this video in the description, or you can go to InvestiQuant.com/webinar. All right, now let's dig into a study. Yesterday was a big down day in the markets. We had a trend down day where we opened near the highs, we closed near the lows, we had huge ranges, and we ended up closing at a 20-day low as well. So what I want to do this morning is take a look at what has happened historically when you get a trend down day to a 20-day low close while still above a 200-day moving average. So let's set this up. I've got all four instruments selected here already. We're going to be looking at getting long at the open of regular trading hours, which is 9:30 a.m. Eastern Time, exiting at the close, which is 4:15 p.m. Eastern Time. Now, in the opening filters, I have no idea which way we're going to be opening, but I think the key point from this morning is we're not really getting a sizable gap. We're kind of hovering around the prior day closing price. So I'm going to make a custom gap size as a percentage of the 5-day ATR, and I'm going to say that the open is within 25% of the 5-day ATR. So that's just going to be a smallish gap. It could be in either direction. Currently, 25% of the ATR in the S&P is about 19 points, so ATRs are a bit expanded here. But if we ended up opening outside of that, you can come in here and adjust that on your own. All right, next, I'm going to go into price patterns. And I'm going to say that we closed at a 20-day low close. Just hit equals here to add that. Then I'm going to go into the market profile patterns. And we've got trend day already created here for you. There's all kinds of ways that you can describe a trend day. We've got a definition that we use within the market profile patterns based upon opening at one end of the range, closing at the other end, and having some additional range beyond what is normal. So there's a more technical definition, but that kind of captures it. You're opening at one side of the day's end, one side of the day's range, closing at the other side, and you're getting range expansion. Lastly, I'm going to go to indicators, say we are above a 200-day moving average, then click view results. And here we go. So these are the results of going long at the open of regular trading hours, exiting at the close of regular trading hours when you get this trend down day to a 20-day low close. This is taking place above a 200-day moving average, and you are following it up with a flat-ish open, so opening less than 25% of the 5-day ATR. Historically, 31 samples in the S&P, 30 in the NASDAQ, 27 in the Dow, and 18 in the Russell. And win rates on these are kind of mixed. So S&P very neutral, not really showing a bias either direction. NASDAQ just barely favored at 57%, whereas Dow and Russell have been a little bit weaker historically, around 38% win rates on each of those. And a real quick look at the S&P distribution of results, you can see it is kind of all over the place here. We don't see any sort of consensus on what is normal. In fact, the outliers to the downside are just as common as very small winners, and you've got a handful of outliers to the upside. So the results are kind of all over the place on this pattern. Now, since I'm not seeing much that's of interest to me here, I did want to show you one other idea based upon this pattern, and it's just a different setup. So this isn't showing much of an edge off the open. However, you can find different ways to take advantage of patterns, and we've got many different ways to do that here in the platform, including opening ranges. So if I change this up to a 30-minute opening range, this is going to be looking at entering at the high or the low of the first 30 minutes. And if I select the high fade of the 30-minute opening range, that means the entry would be on a retest of the high made in the first 30 minutes of trading. It would be set up as a short. So shorting the high made in the first 30 minutes with this pattern. And then I can just throw a stop and target. I don't normally show this stuff, but there's all kinds of features within this platform that you don't get to see on a daily basis just because of lack of time. But I'm going to show you just a 30% stop, 30% target. So that's a 1-to-1 ratio on the exact same setup. Where you are fading the high made in the first 30 minutes and then hit view results. And here are the results of the 30-minute high fade on the exact same setup. But you can see here on the high fade, if you wait a little bit and let the day develop. The high fade has shown a little bit of a bias here to be favored. So the win rate on this, and this is a high fade, is a short trade. The win rate on this is about 68% here in the S&P, 63 in the NASDAQ, almost 70 in the YM, 73 in the Russell. So this is just waiting for 30 minutes of trading and then getting short on a retest of the high made in the first 30 minutes. It's a 1-to-1 stop target. No idea if this is the best stop target. You can play around with different exits on this, but this is just another idea around this pattern that you might find interesting. So before I sign off, again, webinar this afternoon after the close at 4:30 p.m. Eastern Time. You can sign up for that at InvestiQuant.com/webinar. I'd love to see you there. Good luck, and we'll see you next time.